Hello everyone, welcome back to the SPAC Arena. Today we're going to review IPOC that's going to be merging with Clover Health. So this is Chamath's SPAC, and let me cut it straight to the point. I think that this is a complete stinker. I wouldn't touch it with your 10-foot pole. We'll look at it a little bit, but don't expect a lot from this review. It's going to be short and it's going to be brutal. So I'll see you in a minute. Please like and subscribe. I'll see you right after the intro. All right, guys, let's get started with IPOC. And the first thing that comes to mind is that I can't believe that Chamath actually picked this company to merge with. I feel like this reeks of desperation and like he barely did any due diligence. When you guys find out this information, you're going to be extremely suspicious and you're probably not going to want to invest in this company. So usually I like to look at the investor presentation first, right? Look at it and see what the company has done in the past, what's their execution plan to return shareholder value over time. But in this company, their investor presentation is basically this type of slides. Technology company, better outcomes at lower cost. Growing, there's literally nothing, right? A 5-year-old could have done a presentation like this. So everything around this company is suspicious, but let's go with the basics. What is this company? Well, they describe it as a mix between an insurance company and a healthcare company. So they describe it as a unique model in health insurance. Clover partners with primary care physicians using its software platform to deliver data-driven, personalized insights at the point of care. So they value the company at 3.7 billion. It's expected to provide up to 1.2 billion in cash proceeds with a 400 million pipe. So what they plan on doing is giving software to doctors to accumulate data, right? And using that data, they want to find the better course of action for their patients, thereby lowering cost and lowering the number of times you have to go to the ER, the number of times that you have to go to the doctor, and just be in better health in general. So the big idea sounds pretty good, right? That sounds like a very good mission. But the management team of the company is completely suspicious and surrounded with drama, as I'm about to show you. So first we have Chamath with IPOC, and you guys know that his track record when it comes to social capital, his venture firm in Silicon Valley, is not the best. So the firm is imploding, and 9 sources blame Chamath for its demise. Really, what happened, from my understanding, it as his partners left the company, he stopped paying attention to it, and he was chasing a woman in Europe. Meanwhile, the company was left to work without him, and since then they haven't had a lot of success. And Chamath is really good at marketing. Right now, he's trying to redeem himself using the SPACs. But one of the things that I don't like about Chamath, and I said the same thing with IPOB, is how he's really pumping these companies using all the Silicon Valley keywords. So when he talks about Clover Health, right, instead of talking about it like an insurance company, he's talking about it as a technology company. He's talking about their powerful software and as machine learning and it's data driven and all of those keywords to try and pump up the share price and make the company look like it has more value than it really is for what the company is. So that's the first thing, but now there's even worse when we look at the management for Clover Health itself. And then we have Vivek Garipalli, the CEO and founder of Clover Health. This guy, Google him, you'll find a lot of information. Again, I can't say for sure, right? Because these are just stories that you read, but it's very suspicious. It would not give me confidence in my investment. So it all started when he bought hospitals in New Jersey. So they were desperate to have an injection of money, right? So they accepted his offer. So he bought this hospital. And then what happened with it? It was a for profit hospital. So, of course, the guy wants to make profit. Nothing wrong with that. But he was an unlikely candidate to take over the medical center. He had no medical background and had never run an hospital before. Again, new investor, like they needed someone. Okay, nothing wrong with that. But it keeps going. So under his management, BMC became the most expensive hospital in the country. He went on to acquire Hoboken University Medical Center, so he bought more hospitals. His gamble paid off. The same year he acquired Christ, Gallipoli bought a 11 million Southampton mansion. All right, guys, remind me, who do we know at a SPAC recently was the founder and immediately after siphoning off a lot of money from the company, went and bought himself a mansion in Utah? Who do we know? Remember this one. So then in 2019, a report by the State Commission of Investigation found that Gary Pally and CarePoint's co-owners siphoned more than 150 million from the three hospitals into management companies between 2013 and 2016. So they took that, they paid themselves millions and millions of dollars. They didn't reinvest in the hospitals. And what happened with the hospitals? Well, now they're all in bankruptcy. So last year, Gary Pally announced he was selling the CarePoint hospitals, new regulations that cut into the hospital's business model. The facility had lost 30 million over the span of 2 years. Again, now they're looking for more investors because the hospitals are in bankruptcy almost. So New Jersey legislator called for probe of insurance unicorn. New Jersey legislator called for state officials to investigate insurance startup Clover Health. So they'll tell you in this article all you need to know, but basically it recaps what I was just talking about. The New Jersey hospitals, the 150 million management fees, everything that's gone wrong with this transaction, and it all funnels back to Vivek Garipalli. And just so you guys realize this is an article from February 18th, 2020. So it's not like it just came out yesterday and it's a hit piece to tear down Chamath or this other guy, right? This is an ongoing thing that's been going on for several months. And despite that, Chamath still went ahead and announced a merger this week. So what do you guys think about this? To me, I mean, it's reeks of desperation. And if I had a fiduciary duty to my investors, an investment of multiple $billion, right? They're valuing the company at 3.5 billion. I would be extremely, extremely suspicious dealing with this person, Vivek Garipalli. Is there wrongdoing? Well, the guy hasn't been charged with anything, right? But it just doesn't smell right. And we're in a crisis right now of confidence with the SPACs after Nikola. People don't like Fertitta with LCA. You guys saw what happened with the share price there. So do with it what you guys want. But for me, I mean, that's just very, very bad start when I'm analyzing this company. But enough about the management team. What do they see in this company? Let's look at their investment thesis. So it boils down to Clover is a technology company, not an insurance company, not a healthcare company. It's a technology company whose software allows them to improve outcomes and lower costs, quickly capturing shares. It supercharges the entire business by creating a low-cost acquisition channel. So a lot of buzzwords here. Fastest growing Medicare Advantage company, fastest growing market, and healthcare has grown faster than everything, including big tech. All right, so that's good. Oh, growth times growth. So this is their investment thesis in Clover Health, guys. If we dig a little bit deeper, we can see that right now they have 57,000 members in 34 counties, which of course is very, very small. But my guess here is that they were using their patients from the hospitals to funnel into this system. They were probably signing them up into this plan, telling them that they could save money, and that's how they grew their numbers. This is just my theory, right? They don't talk about it, of course, in the investor presentation. But gross premium revenue 2018 354 million, 457 million in 2019, and then 664 million projected in 2020. So again, market share, established markets. This means absolutely nothing. Their markets that they're established in is in New Jersey, where they were probably using their hospitals. So I'm not paying attention to that personally. So right now they're in 34 counties, mostly located in New Jersey, and of course they want to expand to other states like Texas, South Carolina, Georgia, right? They want to expand to other places and expand their network. So then in 2021, they think that they can reach 73,000 members, and that would be by expanding to 108 counties in the country. So they would expand to South Carolina, Georgia, and then Mississippi. And those other states, I guess they're not yet opening them in 2021. Maybe that's in the future. So this is what they call their path to 25 billion in revenue, and that of course is when they would be covering the entire country, and then that would be with 28 million members. So that would be a gigantic company at that point, and of course that would be excellent for the shareholders if you stuck around this long. So let's take a quick look at their financial projections. In 2020, they have 56,000 members. They believe that they can increase that by 30 to 40% per year over the next couple of years. That would be very good for the company, of course. And then their total revenue, same thing, 671 million this year. That's very nice, right? And then they can increase it by 31 to 41% in the next few years from 21 to 23. Now, gross profit, though, that's where it's not as good. 2020, they have 121 million in gross profit, which leads to a net loss of 43 million dollars. And then in the next few years, right, until 2022, they still expect to lose 31 million, and they, according to their projections, would get a profit of 16 million after all of the fees and expenses, right, on a revenue of 1.7 billion. So that is very small margin. They must have a lot of expenses for this company. So again, like not until 2023 are you going to see a profit with this company, according to their own projections. All right, guys, in the close, let's look at the chart real quick and see what happened recently with it. So even before he announced the merger, this company had some hype around it just because of the fact that it's Chamath. Everyone knows he's well connected. Just recently, he had IPOB, which Open Door seems like a much better company than this, much better target. So people expected him to get a company in Europe, right? That was the plan for this company, IPOC. But because of that, the shares had been around 11.50 to $13 over time. But as soon as they announced that he was going to be on CNBC in the morning, people just bid it up to 14.78. I mean, just over and over again, we've been talking about this on the channel constantly. People just fall for the hype and FOMO and just constantly overpay for stuff. So I hope it's none of you guys, but 14.78 was the high. And then as soon as he announced the merger, like instantly, it just completely tanked, right, during the day. And now a couple days later, it's at 10.59. So this company, I have absolutely no expectations that the price is going to do anything. In fact, it's in the healthcare industry, which no one expected from this company. That's not what the target they were going for. And if we look at CCXX, which in my opinion seems to be a better company in every regards, right after the merger already fell below $10. Now it's at 9.85. So what do I right now? Just to mention, the warrants at 2.39, I believe, is very expensive for this company. But what do I think about the company and what am I going to be doing? Well, first of all, I'm not touching it at all. I mentioned this in the intro. I'm not even going to touch it with your 10-foot pole. I mean, to me, this is a complete stinker. And in fact, when the company merges, if they even make it to the merger, I would not be surprised if this transaction was outright canceled at some point, but by one of the parties. I'll be honest with you, I'm telling you right now, I'm not even sure we'll make it to the merger. But if they make it to the merger, like quote me on this. This stock is going to go under $10 and I probably buy puts on it. Like this stock has no redeemable value to me, mostly because of the management company. I'm not your financial advisor. You guys can invest the way you want, but this is my opinion for the company. Like in theory, it sounds great, but when you look at it objectively, there's way too much risk, no rewards here. It's a bad play. There's much better companies out there, much better SPACs. So I'm not even going to touch it. I'm not probably going to be talking about it on the channel a lot. So if you guys want to follow it, just leave comments, let me know about it. But I'm personally not going to be investing in this company. So I hope you enjoyed the review. Please let me know your comments. Did you guys know about like the management team and what do you think about the CEO guy? So we'll talk about all of that and I'll see you guys later. Thank you for watching.